Hey, what's up, guys? It's Gavin. It's me. So I just wanted to show you guys what I've been doing. I mean, you guys are really curious, and the main point of this video, from what I understand, is just to explain options. So this is where I've been trading Robinhood, and basically, let's get into what Phil was talking about a little bit. So how you pick one is so generally, I like to go with calls. They're a little more dependable in my opinion because I'm bullish. You know what I mean? Mainly, this is a bullish market, but really, I don't hold much longer than 2 hours. Really, I mean, it's definitely a day trade. And then you go click. This is your expiration. So like today is like the 19th, and then not today's the 19th. Today's the 14th, but they go out of ways, and like you can pick, what day you want to expire. Like October 3rd. This is on the SPY, by the way. And if you want to do a put, you just click put, but we're doing calls. So this is the current price. So the current price is obviously what it is. It's the price per share, and everything above it is out of the money, and everything below it is in the money. So obviously you can see contracts and options in the money are much more valuable because they are currently the call has a lower strike price than what the current price is, meaning if it were to expire right now, you would make money. Now, out of the money means if it were to expire right now, you'd make zero, jack shit. But the only reason these are still worth something is because there's still time value. You still have till October 3rd for this thing to possibly get to the current price or above it. These things are always moving. Like yesterday, these could have been down here for real cheap, or vice versa. And next week these could be up here because the price of SPY could skyrocket, or vice versa. And so basically, when you're picking an option to buy day trading, we're talking about strictly day trading. I couldn't educate you guys on how to invest with options. I mean, I know a little bit, but it's not really useful. When you're picking an option, you want a stock with a lot of volatility, obviously, and you don't want to get in the money options because they're already in the money, so they're already evaluated really high as far as the price goes. They're kind of expensive because obviously they're in the money, and you don't get the highest returns. So you can go way up here and you can get really cheap ones. So it's the price for one contract of one of these is the price you see times 100. So this is $9 for this option, and then $150 for this option. So generally I like to go up a few notches. I don't like getting super cheap. I mean, you can definitely make a lot of money, but I have found that the ones a little bit closer to the share price are a little bit safer. So I'd probably go with either this one right here, this dollar, or I'd go with this 69 cents, and then you just click it, and then you just click continue, and then obviously let's say you just did 103. They can put a limit in. You always want to use limits because they have spreads, pretty bad spreads, and then one share or one contract, and then that's $103. You know what I mean? And then you just send out your order. So yeah, it's pretty basic. I mean, I'm assuming, I know you guys know how to trade stocks. I mean, you don't watch anything else besides this. But if you're going to be going and buying options on a new stock that you've never done it before, you really got to go look at the option volume. So there's Greeks, so look at it right here. But these don't matter. These are really complicated, and they're not really important with day trading. But the volume and the open interest, this is actually pretty decent volumes. You'll get filled. I know it looks crazy. Jory was talking about that, but yeah, you want to make sure the volume isn't 0 or 10. So these are pretty good. And then yeah, so that's kind of how you do that. And then I base my trades off of time of day, so I try to get it when it's closer to 10 or 11, because I noticed that the peaks or the bottoms or the peaks happen at about just before lunchtime or at lunchtime. So that's basically just how I trade. Look for little volatility like this right here. If you were to get a put or a handful of puts right here, that drop right there, if you were to get an option with the right expiration date, that right there is easily 20%.